Here are the crypto top headlines covered in this video. Gigantic bubble cycle could be in play for crypto markets, according to ex-Goldman Sachs executive. Next, Ether ETF likely coming as SEC implicitly nodded ETH as commodity. Also, billionaire Shark Tank star Mark Cuban blasts SEC, says the regulator fails to protect investors. Plus, SEC has been backed into a corner on BTC ETF approval, says Bloomberg Analyst. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, gigantic bubble cycle could be in play for crypto markets, according to ex-Goldman Sachs executive. Ex-Goldman Sachs executive Raoul says that a massive bubble cycle could be on the horizon for crypto markets. In a new interview with crypto influencer Scott Melker, the macro guru and Real Vision chief executive says that while he believes the current market cycle is probably a normal one, there's also a 20% chance it will be a gigantic bubble cycle. Here's my probability set. 60% chance it's a regular cycle, somewhat like the last cycle, but maybe a bit more like the previous cycle, like 2017. That got a little bit crazy. There's a 20% chance that maybe it all gets front-loaded because we've got all the retail demand, and it actually is a shorter cycle than expected. If you think the previous cycle was actually a bit stunted versus where people's expectations were, maybe this is stunted in terms of time. The other outcome I've got, the other 20% chance, is that it is a gigantic bubble cycle somewhere between the 2012 and 2013 version and the 2015, because everyone can now participate and total madness will ensue. And I don't know which one of the three it will be, but they've all got a decent chance. Powell says investor sentiment points towards the belief of a shorter cycle. However, he says that while they may be right in terms of prices rising, they're likely wrong about the length of the cycle. Everyone was a little shocked we didn't have a final leg the last time around, so they've now got that imprint. So now they're all expecting it to be a smaller cycle. And I always look for where the crowd can be wrong, but still be right, which is that it goes up, but it goes up more than they think. Our next top headline, Ether ETF likely coming as SEC implicitly nodded ETH as commodity, says Analyst. According to Bloomberg ETF analyst James Seifert, the U.S. securities regulator implicitly accepted Ether as a commodity when it greenlit Ethereum futures ETFs. The United States Securities and Exchange Commission implicitly accepted Ether as a commodity when it approved ETH futures exchange-traded funds last year, meaning a spot ETF variant is likely set for this year, according to Bloomberg ETF analyst James Seifert. Speaking during CryptoQuant's private webinar on January 4th, Seifert alluded to the approval of the Ether futures ETFs in October 2023, noting that the SEC did not challenge the coin's classification through the ETF registration process with the Commodity Futures Trading Commission. The CFTC is blatantly calling Ethereum a commodity. They do not call them securities. The SEC has approved Ethereum futures ETFs, so again, Gary Gensler will not explicitly say whether Ethereum is a security or a commodity, but in their action by approving those Ethereum futures ETFs, they're implicitly accepting those Ethereum futures as commodities futures. Seifert said the SEC likely had no bandwidth to dispute the classification. The first Ether futures ETFs in the U.S. were listed for trading on October 2nd, with several investment firms launching a total of 9 funds on the Chicago Board Options Exchange, including ProShares, Van Eck, Bitwise, Valkyrie, Kelly, and Volshares. According to Seifert, the SEC could find itself in court and have to unlist futures ETFs if it were to deem Ether a security. The classification matters since securities and commodities ETFs face different legal requirements with different taxes and regulatory burdens attached to securities. It wouldn't just be the SEC going against the crypto industry. If they call Ethereum a security, it'll be going against their sister regulator, CFTC. That's why I think we could see potential Ethereum ETFs approved this year as well, the analyst noted. The SEC recently lost a court case under a similar dispute in which it exempted the Spikes Index, a stock volatility index, from the definition of security futures under claims of promoting competition among such indexes. There's precedent here to say it matters how these things are registered, said Seifert. The SEC has a final decision deadline for Van Eck ARC21 shares and Hashdex's Spot Ether ETF in May 2024, with other decision deadlines coming in the months following. Before then, however, the regulator must disclose its verdict on spot Bitcoin ETFs. Seifert predicts an approval by January 10th, with $10 billion flowing into Bitcoin ETFs within 12 months. Our next top headline, Billionaire Shark Tank star Mark Cuban blasts SEC, says the regulator fails to protect investors. Celebrity billionaire Mark Cuban thinks the U.S. Securities and Exchange Commission doesn't do an effective job of protecting investors. The Shark Tank star refers to the SEC as the QuickBooks of financial regulation. They don't protect anyone, but they are really good at bookkeeping. Has the SEC ever moved in to protect investors before something bad has happened? I've supported and profited from sharesleuth.com, finding obviously fraudulent companies and publishing what we have found. The SEC has never stepped in to stop the fraud, including one company we showed that had no power to their operations but was issuing releases, LOL. Sharesleuth.com, which Cuban owns, publishes investigations that probe fraud and deception by public companies and their executives. Cuban also calls for new securities laws for crypto assets. All you need to know is that Howey was not enough to cover every situation, so Reeves came along. Now there's a need for a crypto complement to Howey and Reeves. It's also nice to know that if the SEC had taken the same path as Japan and required collateral for crypto loans, all the bankrupt crypto services would still be alive, just as FTX Japan is. The Howey test is a legal criterion often cited to determine whether a transaction counts as an investment contract or not. According to the test, an investment contract is a contract transaction or scheme whereby a person invests his money in a common enterprise and is led to expect profits solely from the efforts of the promoter or a third party. The Reeves test focuses on whether a financial instrument or offering is a security, according to SIMFA, a trade association for broker-dealers, investment banks, and asset managers operating in the U.S. and abroad. Explains the trade association, the Reeves test identifies 4 factors, the balance of which can indicate whether or not a note is a security. They are 1. The motivations of the buyer and seller, 2. The plan of distribution, 3. The reasonable expectations of the investing public, and 4. Any risk-reducing considerations. Our next top headline, SEC has been backed into a corner on BTC ETF approval, says Bloomberg Analyst. A go-ahead from the U.S. Securities and Exchange Commission could trigger $10 billion in inflows to Bitcoin ETFs in the first year, says Bloomberg's James Seifert. The United States Securities and Exchange Commission has been backed into a corner to approve a spot Bitcoin exchange-traded fund in the opinion of Bloomberg analyst James Seifert. During a private webinar with Crypto Quant on January 4th, Seifert said the investment vehicle has a 90% chance of receiving the green light next week, although challenges may still arise. The SEC is either going to have to come up with a new reason because you've been denying these ETFs for all these reasons. Courts said those reasons don't matter anymore, and now you're coming out with new reasons. I don't think that's an option for the SEC. The other option is to get them to withdraw, in which case, again, I don't think that's likely because the SEC is backed into a corner here. I think they have to approve. Seifert's comments refer to the latest developments following BlackRock's filing for a spot BTC ETF in June. Since then, SEC officials have held dozens of meetings with asset managers in line for approval, addressing concerns and requesting adjustments. In addition, the regulator lost a court battle in August with one of the firms in the race, Grayscale, over the conversion of its over-the-counter Grayscale Bitcoin Trust into a listed BTC ETF. In addition, the analyst shared his thoughts on Matrix Port's latest report on a potential rejection of all proposals. We just completely disagree, to be honest, he noted, clarifying that concerns about the approval requirements or Coinbase's role in surveillance agreements have been addressed over the previous months through amendments made by asset managers. And then the third option, which is the one I'm kind of worried about at the back of my mind, is like somebody going nuclear. Like Gary just kind of doing, I guess denying would be going nuclear, which I don't think that's going to happen either. This is a super huge tail risk event. A go-ahead in the coming days could bring $10 billion in inflows to Bitcoin ETFs in the first year, according to Seifert. I do not think we're going to get over $100 billion in the first year or two. To put in perspective, gold ETFs have about $100 billion in the U.S. in total. Furthermore, Seifert warned that widespread adoption could take weeks or even months, since institutional investors will likely carry out due diligence before adding the cryptocurrency to their portfolios. A lot of the big institutions, these warehouses, these platforms, where brokers or advisors work, they can't just buy anything they want. There's like an approved list and a not approved list, the analyst explained. You've got to realize these are some of the most sophisticated traders in the world. It's not like some random person in their basement clicking buy on Coinbase. They are sophisticated people getting exposure. The final decision by the SEC is due by January 10th. Seifert anticipates a collective approval for all the applicants, noting that Grayscale's conversion might require a few additional days compared to the other proposed funds. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.